The Home Depot is honoring one of its founders, Ken Langone, here in New York City today. NYU Langone Health is going to be cutting a ribbon-cutting ceremony for the Home Depot Emergency Department in Cobble Hill, Brooklyn. The Home Depot Foundation issuing a $10 million grant to support the site's ambulatory care center in Ken's honor. Earlier this week, the Home Depot reported third-quarter earnings and revenue above street expectations and raised its full-year outlook. The stock has done well. For more on all of this, we want to welcome Home Depot's chair and CEO, Ted Decker. He joins us exclusively and on set for the first time. And Ted, welcome. It's really great to have you on set with us.
Thanks for having us.
We're going to talk about what's happening at the Langone Center in just a little bit, but why don't we start with the numbers from earlier this week. You guys had strong numbers. You raised guidance, but that raised guidance was based on the idea of what you've already seen.
That's right.
It wasn't about the outlook. So why don't you tell us what you've seen since that last quarter closed?
Well, as we said, we raised our outlook to minus 2.5% for the year, and that was really based on just phenomenal October weather. People were able to engage longer, and then the hurricanes. We're still seeing pressure on the larger remodel projects. So when we carried through those better results and some expectation on hurricane into Q4, but fundamentally we're still looking for that turn in remodeling to really drive the bigger project demand in the business.
Have you been surprised that mortgage rates have actually climbed since the Fed started cutting interest rates?
It was a surprise. I mean, we're all looking for housing to unlock, and one of the key reasons people aren't moving is because of those high mortgage rates and locked into the lower rates. Our housing turnover now is at a 40-year low at just on 3% of overall U.S. homes turning over. So we were hopeful with the rates coming that mortgage rates would come down, but in fact, they've gone up by the same amount that short-term rates have come down. So this will all come to pass and markets will get to equilibrium, but we still have some work to do on those mortgage rates.
We have watched the stock market really climb pretty significantly post-election. A lot of investor confidence that you see kind of playing out. And the question we've been trying to figure out is that carrying over into consumer confidence in the form of spending? Have you seen that in your stores?
Well, we have a little different situation. I mean, we have, first of all, an extraordinarily strong consumer. I mean, our consumer is gainfully employed, seeing higher wages, equity balances, and then the highest store of value for our customer is their home. 80% of our customers own their home, and they've seen tremendous appreciation in their home since 2019, as much as 50% increase in home values. So our customer has a store of value. They're staying in that home. It's aging, and they want to take on, they tell us they want to take on projects, but they're still just a little bit uncertain with the overall economy, what's going to happen with tax rates, what's going to happen with inflation, and ultimately interest rates. But there's building up a pent-up demand, if you will, for these larger remodel projects.
Does resurgent inflation scare you more? Would you like rates just to be cut for housing, or do you still worry about inflation not being totally conquered? And you should know, probably.
Well, I think, again, what translates into a mortgage rate would be the thing that we're most interested in, or HELOC rate. So there's $11 trillion of tappable equity in U.S. housing. The store of value of the entire U.S. housing market is over $45 trillion. $11 trillion of that is available for withdrawals to fund larger remodel projects. We used to see something like $80 or even $100 billion a quarter of HELOC withdrawal, a lot of that going into home improvement projects. That's down to like $20 billion.
But with lumber and all the other stuff that you must be one of the largest providers of lumber. You know about commodity prices long before anybody else does.
And those have come down. So
is the genie back in the bottle?
Yeah.
Can we relax on inflation?
I think on goods and what we're seeing in our business and pressure from our supplier partners, we are well past. We've digested that rapid increase in prices.
So you lower rates. You're ready.
Well,
you're ready for rates.
We're ready.
Does the threat of tariffs change that picture? How much of the goods that you're bringing in are coming from overseas?
That could. So we're sourced, over half of our product is sourced in North America, but we certainly get a good bit from Asia, and China in particular. We've been through this before with the tariffs that were imposed in 2017. 25% tariffs in a good percentage of our goods. And we work through that. We work with our supplier partners, we work with our supply chains, trying to make sure we can still bring the best value on shelf for our customers. Our suppliers have done a meaningful job of diversifying out of China in the last 4 or 5 years, but there is still a significant base of manufacturing of our type product in China. Too early to tell what will happen there, but we think with our merchants and our supplier partners in particular, we're the scale player. Any tariff that would happen would be broadly dispersed across our industry, and I'd bet on our team to be able to manage through that the best. The thing that we're much more interested in is corporate tax rates. Home Depot is one of the absolute largest in nominal terms, highest payer of corporate taxes. Some quarters, in fact, we are the single highest payer of taxes in the United States. So keeping that rate down at 21%, or even some talk of that rate going lower, is terrific for our business because we use that windfall, if you will, back in 17 of lower corporate rates to reinvest in the business. We're building new stores again. We're the only player in our industry, and really big box in the United States of any nature, who are building stores.
What do you think would be? Don't call it a windfall, Ted, please. Elizabeth Warren's watching.
What would be